Joining us now in a CNBC exclusive interview is Drosos, Signet Jewelers CEO. Jenna, welcome. Good to have you here.
Thanks, Sarah. Good to be here.
So talk us through what you're seeing now, because the quarter was obviously pretty disappointing on sales with, sales in North America, comp sales falling more than 39%. But since the reopening, what have you seen from the customer?
Yeah, I think importantly, Sarah, remember our stores were closed for almost half the quarter. What I'm really proud about and what we're seeing now is the power of our sales team working virtually. Our jewelry consultants are all empowered with iPads. They've been working from their homes, and they've been consulting with customers, helping them to find the jewelry that's right for them, to educate, to help curate that online shopping journey from their house.
I've asked you this before, even before this crisis, about whether people actually want to buy engagement rings and jewelry online without having to go in and try it on. And if that's really the case, why weren't your e-commerce sales higher?
Well, our e-commerce sales overall were almost 7%, but that was dragged down by the closure of our New York distribution center for James Allen. So it was about 18% excluding that, and trended up during the quarter as we got our sales team working from home virtually doing online consultations. After we closed our stores on March 23rd, they reached out personally to 23 million customers and did over 100,000 virtual appointments. And so that's what really made us see the rise in e-com sales in April.
Jenna, I wanted to ask you about the price of gold. When we see it over the course of this year rally so significantly, more because of a sort of financial market hedge, a risk-off move, in large part because the economy is weakening. Is that a bit of a double whammy to you, because you also see sales drop off because of that weakening economy, and it pushes up the biggest raw commodity cost that you have? Or conversely, is it strangely a positive, because even if the price of the product rises, it kind of seems more attractive to the consumer to be buying products made of gold?
Yeah, fine jewelry is always, I think, a good gift to give, something good for people to buy for themselves, because it has commodity value. Diamonds and gold always have value. And so when people are concerned about the economy, they tend to go for that kind of gift more often. We see that as a positive, because we're a large company, we have great relationships with our vendors, and we are able to provide a great value to our customers even as prices rise, especially relative to competition.
Jenna, on the decision that you announced today that you're going to permanently close or not reopen 400 stores worldwide, what is it that led you to that decision specifically that you saw during the crisis?
Sarah, we've been bringing data and analytics into our business significantly more over the last couple of years. And we did a greenfield analysis, which is really taking a white sheet of paper and saying, where should we have stores? And we found a number of markets where we're overstored. We found some places where we're still too highly exposed to declining C malls or B malls. And we found more opportunities to move our stores off mall. And so that's what we're doing. And we announced that we'll take a first big step on that this year, following the last 2 years of consolidating some of our stores, particularly out of D malls and regional banners. What's really important, though, is to think about how we're reimagining the whole shopping experience. It's not just about Kay in one store or Zales in another. We've been looking at exciting new footprint opportunities. We've been testing James Allen inside Jared, for example, and it's driving traffic and conversion. And we think there's more opportunity for us to use the houses that we're in to support more banners.
The stock has come off of the lows that we saw in March, like most of the market, but still, 5-10-year looking chart, Jenna, it doesn't look good. I've been talking to you throughout this transition. You came in to turn around this company, both culturally and financially. How much of a setback is the pandemic, and how do you implement a turnaround of a brand that's so exposed to weaker spots like the mall at a time where there's so little visibility even to what comes next on the economy?
I think on the stock price, Sarah, COVID-19 is a temporary setback for us. I mean, you saw we had a very strong holiday and saw some increased momentum in our share price coming out of that. We reported at the time that we did our year-end announcement that we had a good Valentine's Day. I talked about this morning that we had a good Mother's Day. The strategies that we've put in place have been working on customer first, better merchandise, and more targeted marketing, omni-channel. We've exploded during this COVID-19 crisis, bringing new tools to our jewelry consultants to serve customers in different ways. And then in our culture of agility and efficiency, we're testing and learning faster. And we announced today an incremental $100 million of cost savings. We will well exceed the $200 to $225 million we were looking to save as part of Path to Brilliance. So the strategies are working. I think we're accelerating the strategies that are important coming through this crisis. And I see Signet emerging as a stronger team and company on the other side.
Gina Drosos, thank you very much for joining us to talk through it.
Thank you, Sarah.